In this video, guys, we're going to look at the rounding bottom pattern. Stay tuned. Hey traders, warm welcome to you. All right, so rounding bottom pattern, pretty classical chart pattern, but doesn't get much love because it's a bit of a pattern that's a lot of discretion involved in it. You know, we look at a double bottom, for example, the market hits the low, market comes back up, market then revisits the low. It's pretty unambiguous, pretty simple to work out. But a rounding bottom pattern is a bit more loose, takes a bit longer. It's a bit of a slower change in supply, demand, or in sentiment. So, you know, whereas a double bottom might come down and rip straight back up again, you're getting supply demand, you know, shift quite dramatically. If we go and we have a look, say, at NASDAQ, for example, or any of these recent indexes that have kind of pushed low and pushed higher, you know, there was a distinct change in sentiment. This was a V-shaped bottom, this wasn't a double bottom. But when you get distinct change in sentiment, it's a lot easier to see what's going on. People would trade this with a trend line break. You could argue a double bottom here after a few days. But anyway, the point is, let's look at the rounding bottom. So the rounding bottom is, you know, something that takes a long time. It sits at lows and then it kind of gets a little bit of positivity to it, a little bit of a bid comes in. Perfect example here on Marks and Spencer's UK stock. This is kind of a classical rounding bottom, if you like. Some people might say we've got a cup and handle here, but let's just focus on the attributes of the rounding bottom. Put another example up in a moment. So the point of the rounding bottom is that it's just very quiet. You know, it's not particularly my favorite trade. However, I think it's a good precursor to say, right, maybe we've changed now. Maybe some buyers are going to come in. Maybe I can now look for an additional setup. So the attributes are, you know, kind of a push down to lows. And if we'll just get the brush out here, you know, push down to lows, kind of just sits at lows, and then it kind of pushes back up, and you know, you could say that's the handle here if we're talking about a cup and handle. But the idea is that it kind of sits at lows, it decides to stay there for a while, doesn't really push to new lows, and then it's almost as if it's like, well, you know, maybe we should push back up again, and starts to push back up. The thing is with these rounded bottoms is that, you know, sometimes you can get a trigger based on, let's say, a resistance level breaking. So for example, here we could say, okay, the 102, when that broke, you go long. But you know, you're playing with fire a little bit with that because the volatility is low, and a kind of breakout trade of a resistance is more of a momentum ignition type trade. So your better bet, in my opinion, and if someone else can, you know, comment, please do in the comment section below if you've got a better approach for these kind of things, is to wait for the rounding bottom to form. Say, yes, the box has been ticked, so to speak, we have the rounding bottom. Now look for an entry with candlestick patterns, you know, maybe some kind of wick to the downside, maybe you get a bullish engulfing, maybe you get a kind of break of a flag if this is forming a flag, break of a pull, something that happens after the rounding bottom to give you a chance to get in. Let's look at another one that happened. Let's go for another stock. Let's look at Twitter and scroll back a little bit. Let me just get rid of that. I left the drawing panel. Okay, so this is an interesting one, really, guys, because after earnings, you know, push lower, it formed this little rounding bottom here. Now, this is not perfect, which is good. We don't want to cherry pick stuff. We don't look at the perfect examples. Let's sort of form this rounding bottom, and it kind of gave you a hint that said, okay, well, actually, maybe the sellers have done after that sell-off after earnings. Maybe it's not pushing lower. And this kind of stagnated a bit, and actually when you start to zoom in, it's not unlike the Marks and Spencer one, except this is kind of forming, this area here is forming a little bit higher, right? So this is the rounding bottom pattern here, rounding at lows, pushing back up, a little dip, and then, you know, you'll subsequently want to take something after the rounding bottom. So maybe you wait for a break and you make for like a little flag break here, if you could call that a flag. It's a bit grubby, and then pushing up on whatever it may be. Maybe if you're a longer term trader, you kind of just, as soon as it forms the rounding bottom, you kind of pull the trigger on the next month, on the beginning of the next month. Not a bad place to kind of start entering trades if you're a longer term swing trader, and have a stop under that rounding bottom low. Obviously, if you're swing trading, your stops are going to be wider, so it gives you a reasonable thesis. It's okay, well, if I assume now the selling's done, buyers are starting to get more interested, I'm going to be a little bit early with the rounding bottom type trade, but if I take it, then I know that actually if we start to take out that low of the rounding bottom, I probably don't want the trade. I probably don't want to be in it, because the thesis is that now buyers are taking back a little bit more exciting of this, and maybe I can start to scale it out into some momentum. So if you do get some momentum, which will perhaps happen after the rounding bottom, you're early because you're taking it a little bit sooner, you get some momentum, perhaps you can feed some out, scale some out into that. So a couple of choices. Rounding bottom is pretty obvious to look at, guys. Got that kind of round shape as we saw that, and we saw with Marks and Spencer's and plenty of others out there if you go and look for them. But the options are you wait for it to kind of complete and take the trade, have a wider stop, or you say, okay, that's a good initial signal for me. Now let's see if I can get some kind of momentum off the low. So rather than taking flags at highs, take flags off lows, but seeing the rounded bottom first to confirm, or to potentially confirm that you believe that some buyers have stepped in and are potentially going to bid this up. And maybe if you're early to the early to the buy, you can be the one that's enjoying the momentum when the later trades come in and start spiking the market. All right, guys, that's a rounding bottom. Let me know your thoughts in that comment section below. Don't forget to check out our channel sponsor. There's a link to those guys in the description below too. Take care. Bye bye.